It's 10:25 a.m. and I would like to call to order the teleconference meeting of the Finance Auditing Committee of Thursday, October 22nd, 2020. Before we begin, please note this meeting is being recorded. Madam Secretary, please call the roll.
Thank you. Good morning again, Director Cochran.
Here.
Thank you. Director Grosboll. Absent. Director Moylan.
Here.
Present. Director Yee. Absent. Vice Chair Fredericks.
Here.
Present. Chair Sobel.
Here.
Present. And President Parr.
Yes.
Thank you. You have a quorum. You are not a committee of the whole. You also have Directors Belforte, Hill, Maston, and Terrio on the line.
Very good.
I'm going to confirm staff really quickly. Make sure everyone's still here. Dennis Mulligan.
Present.
Thank you. Joe Wire.
Yes.
Thank you. Ava Bauer-Furbish.
Present.
Thank you. Kim Anolius.
Yes, I'm here. Thanks.
Thank you. Steve Miller.
Present.
Present. Mona Babauta. Jim Swindler.
Present.
Thank you. Kelly Hopper.
Present.
Thank you. That confirms staff on the line.
Thank you very much. I would like to remind everyone to mute their phones until after staff's presentations and to remember to unmute when we open up for directors' discussion. If there are questions, the Secretary will call on you accordingly. After the discussion, we will ask for any public comment before moving on. The pages of the meeting packet are numbered on the bottom right-hand corner for ease of following along. Madam Secretary, please introduce the first item.
Thank you, Chair Sobel. Item number 3 is ratification of previous actions by the Auditor Controller. The packet of commitments, ratifications, and investments is before you and begins on page 3. Leslie Murphy is on the line to provide a report. Ms. Murphy, please begin your presentation.
Good morning, everyone.
Good morning.
Morning.
Good morning. Thanks for your time. I know that you will be hearing, many of you will be hearing from my colleague, Ellen Clark, in just a bit this morning, so I'll try to keep my comments brief, but as usual, there are no shortage of things to talk about in the financial market. So let's go ahead and start on page 8 of your agenda packet, page 1 of my report. As usual, we'll start with an update to the U.S. Treasury yield curve. And as I was preparing the report and preparing my comments for this morning, the theme that kind of stuck out to me was settling into the new norm or stagnating in terms of economic indicators, the markets, and of course, interest rates as well. So taking a look at the yield on the 2-year U.S. Treasury obligation, as we've shown in the top half of this page, looking back over the past year, we can see that we're now settling into kind of a different reality. So back in February of 2020, the average daily change in the 2-year U.S. Treasury yield was about 4 basis points. In March, we saw a lot more volatility as the COVID-19 pandemic spread across the globe and kind of upended financial markets. Average daily change in the yield on the 2-year during March was 7 basis points. But from May until now, you can see we've really settled into a new norm of ultra-low rates and a very tight trading range, with the yield on the 2-year changing by just about 1 basis point daily on an average basis. So this kind of feeds into that theme of investors kind of settling in and expecting a long period of very low interest rates. Moving on now to page 9 of your agenda packet, I thought we'd switch gears a little bit. I know recently we've talked a lot about business conditions and business owner sentiment. I thought we would kind of change lens this morning and look at conditions through the lens of the U.S. consumer. And certainly when we're talking about consumers and average everyday individuals, the importance of the labor market cannot be overstated. So what we're showing on this page is an update. This is based on the report with September numbers, which came out in early October. So we can see that the unemployment rate is down now significantly lower than the highs that we saw in April. In April, we saw a high of 14.7%, Overall unemployment rate, that number has since ticked down to 7.9%. So we've made some growth, but we still have a long ways to go. Looking at the chart on the bottom half of this page, this is looking at total employment numbers. You can see pre-pandemic total employment was about 159 individuals employed. Now we're only at about 148 million individuals. So we have that $11 million job gap to get back to pre-pandemic levels. And if September's job increase of 660,000 jobs, if that were to continue at that pace, it would take 17 months to make up that $11 million job gap. So while yes, we are kind of moving in the right direction, I think the pace of improvement has slowed, and I think we're all kind of bracing for a relatively long time period until recovery. That kind of translates as well into consumer spending. So looking at page 10 of the report, what we're showing here are personal spending and personal income. And as expected, personal spending is pretty closely tied to that personal income number. We saw personal income on the bottom half of this page jump in April up to 12.2% as some of those coronavirus relief dollars made their money into folks' pockets. Now we're kind of looking at actually decreasing in personal income month over month to the tune of about 3% in August. That's really largely attributed to the fact that some of that federal pandemic unemployment compensation, that program expired, which had been giving unemployed folks an additional $600 per week. We are now operating under an emergency executive orders, which gives folks an extra $300 per week. But that decrease in available funds has translated into a slowdown in personal spending. We can see for the most recent reading in August, personal spending month over month increased at just a 1% rate. Flipping back now to page 13 of your agenda packet, one person that I can think of that is not stagnating in the current environment is your portfolio manager, Michael Verano, and his team. So again, even in a very low interest rate environment, Michael and his team continue to closely monitor the markets and looking for areas to add value and increase the earnings in your portfolio within your parameters of safety and liquidity. We did purchase some federal agency securities during the month. Federal agencies and U.S. Treasuries will always remain a very core, large portfolio holding, but we also identified some pockets of value in the taxable municipal market, and we're able to purchase some securities at a nice yield pickup relative to U.S. Treasuries. Moving ahead now to page 15 of your agenda packet, taking a look at your overall portfolio allocation. Of course, your portfolio does remain in compliance with both California government code and your investment policy, and it remains very well diversified by both sector and issuer. And as always, while Michael and his team look for opportunities to boost the earnings on your portfolio, our number one and number two priorities will remain to maintain both the safety and the liquidity of your underlying holdings with us. Despite what's happening in the markets and volatility and uncertainty there, we will always maintain our first and foremost focus on the safety of your holdings. And that's the end of my prepared comments this morning. Happy to entertain any questions.
Thank you, Leslie. Are there any questions for Ms. Murphy at this time?
Chair Sobel, I have a question. This is Bert.
Oh, hey, Bert, please go ahead.
Leslie or Ms. Murphy, I do have a question again with the employment and unemployment that I brought up before. There seem to be an awful lot of gig workers around right now. I wish we had some way of including them in those statistics, because I think they fill in holes and they can really tell us a lot more about our economy in terms of employment if they were.
Yeah, that's a good point, and I can certainly kind of look into that. I know on a positive note, unemployed and gig workers are being included in some of those uninsurance benefits. So that's certainly a good thing for the economy. And let me do some digging to see if I can find some more numbers that are going to be released on a regular basis to kind of capture those folks as well.
Thank you.
Perfect. Other questions for Ms. Murphy? All right. Let's see. If we don't have any further questions from board members, that concludes discussion on this item. But before we take our vote on the entire package, Is there anyone from the public wishing to speak on this item?
I'm going to pull the comment line now.
You've been muted. To unmute yourself,
Is there anyone that wishes to
star
speak
key
on this
twice.
item this morning? Okay, thank you.
Mute off.
We have no speakers on this item.
Okay. Well, Leslie, thank you very much for the report. We look forward to chatting with you next month.
Thank you.
All righty. Then, without any further ado, I would take a motion on the ratification of previous actions by the Auditor Controller.
So moved.
Wonderful. Second. Is there a second? Great. All in favor?
Aye.
Aye.
Perfect. Any opposed? All right. I actually usurped your work there, Amaret. But
No, you,
anyway, we
you
got
just
it done.
expedited it. Yeah, we
that's
got it
good.
done.
Okay. All right. Perfect. Then we're good there. The next item is agenda item number 4A, to authorize a budget increase in the fiscal year 2021 Bridge Division capital budget for the Golden Gate Bridge Physical Suicide Deterrent System project. That's project 1526. The staff report can be found on page 23, and Ava Bauer-Furbush will present this report. Ms. Bauer-Furbush, would you begin your report, please?
Yes, this report, similar subject was presented at the BNO meeting, and this action relates to increasing the budget for the physical suicide deterrent project by the amount of $1,474,000. And this increase would be funded with the district reserve. The increase in the project budget is required to extend, to provide additional services necessary for the review of submittals by the construction contractor. The submittals cover the design of the work access platforms, and the services provided by TJA Engineering under professional services agreement. And the nature of the services is to provide second opinion reviews of those submissions, not only for compliance with the project requirements, but also verifying that they are up to par with the content and cover the necessary area of structural engineering calculations. So with this, I'm happy to answer any questions that the committee may have for me.
Madam Secretary, do we have board members, or I'll ask the board if anyone has a question for Ava, please. On item 4A here. I don't hear any. Thank you, Ava, for that report. So that concludes the discussion on this item. Before we take our vote, is there anyone from the public wishing to speak on this item?
We'll pull again. Hang on one second.
Thank you.
We have no speakers on this item.
Wonderful, thank you. Then hearing none, may I have a motion on this item, please?
I'll move.
Perfect. May I have a second?
Second.
Thank you. Madam Secretary, would you please do a roll call vote?
Thank you. I have a first from Director Cochran and a second from Director Moylan. So I'll start with Director Cochran.
Yes.
Thank you. Director Grosboll.
Yes.
Thank you. Director Moylan.
Yes.
Thank you. Director Yee. Absent. Vice Chair Frederick. Yes. Chair Sobel.
Aye.
Aye. And President Barr.
Yes.
Thank you. Motion passes 6-0.
Great. Thank you very, very much. And we move on to item 6. Since there are no actions authorized anything related to grant programs, which is item 5. So item 6 is to approve actions relative to adoption of a Clipper start fare for Marin local rides on Golden Gate Transit bus service, approval of the associated Title VI equity analysis, and amend the master ordinance. The staff report, everyone, begins on page 31, and Joe Wire will present this report. Mr. Wire, are you here and ready to report?
Yes, I am. Thank you very much.
Thank you. Please go ahead.
Yes, and to the committee, before you is the approval of applying the START discounted fares, which were often referred to as the means-based fare program. A little bit of background: the board approved applying this means-based fare program, Clipper START, to all fares on Golden Gate Bridge District Transit Service, regional transit service, with the exception of some of the local markets, in this particular case, with the exception of Marin County local rides. And the reason that the board did not take that action back in 2019 was that at that time, Marin Transit had not decided that they were going to participate in this program. They have since made that decision. They want to participate in the program. As you folks are all aware, the district has a long-standing policy to equate our fares with their fares. Therefore, this item was to apply the discounted program to a local rider, whether they be on a local Marin Transit bus or a local regional bus. Last month, the district held a public hearing, did receive some comments, approximately 9 of them. 8 of the ones that, all the ones that applied to this particular issue were in favor of the district taking an action to make to apply the low-income fare. The district undertook a Title VI analysis and found that there were not the material district impacts on low-income citizens or minority groups by the application of this START low-income fare to local rides on regional transit. And finally, the cost of the program is expected, when we return to more normal operations, to be in the $15,000 to $50,000 a year range. That would be foregone revenue, and that really depends on how broadly the public decides to use these discounted fares, and which go through the application process. As a way of background, the program has been in place regionally now for a little less than 3 months, or just about 3 months. And from the last month of full data we received, we have anywhere from 8 to 10 rides on our system per day. So it's still very small, and we will be following it over the months and years to come to see how much it grows. And if there are any questions, I'm happy to take them at this point.
Great. Thank you, Joe. Are there questions on this item from board members? Anybody else? I don't hear any. That concludes discussion then on this item. Are there any members of the public wishing to speak on this item?
We're going to pull the public line now. Thank you.
Thank you.
We have no speakers on this item.
Thank you. So having no public speakers on this item, may I have a motion on this item?
Also moved.
Thank you. May I have a second?
Second.
Great. Thank you. Madam Secretary, would you do a roll call vote, please?
Thank you. We have a first from Director Cochran and a second from Director Fredericks, starting with Director Cochran.
Yes.
Yes. Director Grossbull.
Yes.
Yes. Director Moylan.
Yes.
Yes. Director Fredericks.
Yes.
Yes. Chair Sobel.
Aye.
Aye. And President Parr.
Yes.
Yes. Thank you. Motion passes 6-0.
Thank you very much. Next on the agenda is the status report on the fiscal year 2020-2021 budget. A brief staff report is found on page 59. And Joe, may we get your report, please?
Yes, happy to do that. If I could have you just flip down another page or two to page 61, which has the actual table. We'll take a look at that. As you're aware, this is we've been doing this every month, and just pointing out where we are. And this was the board's request to make sure that they were kept apprised of the district's progress on the process to balance the 2020-21 budget. If you remember, we started out with a $98 million shortfall difference between revenues and expenses based on the precipitous drop in traffic and patronage that we've seen on the bridge bus and ferry systems. That 98 occurs at the top right-hand corner of the last column, and that gives you a sense, and it sort of falls down from there. So that right-hand column is cumulative reduction of that number as we go through different initiatives that have been able to be implemented. We got the ones we've done, for example, going down is we changed the bridge traffic assumption because it had been higher than we had originally thought back in March, and that's that first line. Then we looked at the carryover of CARES funding that we would have, and that's the second very large line coming in that reduces it just down to 63 or 64 million. And then we had some other lists of things things we know are happening so far, like a delay in staffing. So we have vacancies, that's saving salaries and expense monies, switching into the CalPERS plan for non-reps, and then and the painters. And then we had actual changes to service levels. And in both the bus and ferry system, those are the next major lines, line 5 and 6, we've already made significant changes to service levels, and they involve providing less bus service and less ferry service. The bus service has been ramped down in steps. That's why you see sort of 3 different entries, one for July, one for September, and one for October. It's been ramped down in steps. The ferry ramped its service down prior to the beginning of this fiscal year, so that you just see one line there. And both those have significant savings, and they've brought the number at the end down to approximately 42 million. And then if you look below that, where there are savings we found in the bridge division, both in overtime and also in debt expenses, because as Leslie pointed out, that it's significantly cheaper to borrow money these days. And also in fast track expenses, because we unfortunately have less traffic on the bridge, therefore we're not paying as many fees to operate that particular system. So all told, that brought our $98 million figure down to about $38 million. Unfortunately, we've had some headwinds that we've also faced. And one of those is that MTC has projected that the TDA, STA, RM2 monies, these are monies from local sales taxes or gas taxes or bridge tolls, not the Golden Gate Bridge, are down by approximately $1 million or more than we had projected. And then bus and ferry ridership, unfortunately, is down almost $9 million more than we projected. It has not rebounded, as we have discussed with you each month, and we will discuss again, of course, the next board items, anywhere near what we expected to rebound when we first put this together in March and April. So overall, that got us down to $48 million. And then we have a slight advantage from that at the very bottom, line 10, and that's where we look at the actual bridge traffic, actual ferry and bus painterage each month compared to what the latest projection is. Those latest projections, of course, are listed in the pages right after this page that we're looking at, if you would like to look at them. And each month we update them. So the good news is the bridge traffic is still slightly above by $1 million, and that's in the second to the right column. It's up by about $1 million from where we had projected it. but buses is slightly lower and ferries just about right on. So overall, it's a positive of almost $1 million, and that's why we're sitting right now at $47.8 million job to go. The board, of course, will be considering and is considering future other paths in order to close this shortfall in the next couple of weeks. And the reason is, I say the next couple of weeks is the CARES money that's mentioned at the top, the $23 million, is we have enough to, it looks like right now, to stretch through the end of November, but then that money will be gone. And the only resources that you have at that point is its own emergency operating reserves, which wouldn't be sufficient to carry through the end of the year. So we still have significant work to do. Any questions on this waterfall table or this report?
Board members, committee members, questions on this report that Joe has just given us? Okay. I'm not hearing any, Joe. I know we're going to get into it a little bit more here in the subsequent reports. On the one hand, I know staff is looking, and all divisions and people within divisions are all turning over every rock or however they can look for any amount of savings. And I think we've made some progress, obviously, to take a number from nearly 100 million down to to 48 million, but it's such a significant number. And reflecting on Leslie's report and just what we can see looking out our windows about how quickly our economy is coming back, it forces us to really think through how we're going to proceed from here. So once more, I'll ask if anybody has any questions on this item before I ask for the staff to poll the public on agenda item 7.
Yes, Brian, this is Barb.
Yes, please, go ahead, Madam President.
I think I should have said this when Leslie was here, but for the first time in a long time, I think when Leslie talked to us, she still had her cheery voice, but the information that she gave us, in my opinion, was significantly different, in that it doesn't look as optimistic for recovery when she actually put the numbers on it. So I agree with you. I think the fact that we've gotten it down to $47 million is exemplary, but that's a big end still. So that's all I have to say.
Thank you, Madam President. Any other comments on item 7? Yeah, I would echo the President's comments. I receive reports in various aspects of my life, including banking. And what we really thought would be a short-term hit to the economy, short-term hit to employment, and that sort of thing, maybe on the order of 90 days, 120 days. Well, we're in month 7, and we don't see anything on the horizon yet to indicate that things are going to be rebounding anytime soon. And it's, a desperate situation for a lot of people, and there's absolutely no question about that. So then with item 7, now that we've concluded that, and Amrit, one more time, anybody from the public want to speak on this?
Sure. We're going to poll the public comment line now. Thanks. You. Hang on. We have no speakers on this item.
Very good. Well, thank you. So no action is required on this particular report. So we'll be moving on to item 8, where we have the monthly review of Golden Gate Bridge traffic tolls and bus and ferry transit patronage fares. The staff report begins on page 65. And Mr. Wire will present this item as well as 9A, the monthly statement of revenue and expenses, which begins on page 73, and 9B, monthly statement of capital programs and expenditures, which begins on page 83. Mr. Wire, would you begin your presentations?
Yes, thank you very much again. Please turn down to 2 pages from page 65 that was mentioned down to page 67. That's the page that has, it's in landscape if you're looking at it on your computer. It has the actual bridge, bus, and ferry, both patronage and revenues. So the patronage is on the left-hand side in those three boxes, bridge at the top, bus in the middle, ferry at the bottom. And on the right-hand side is the revenue based on those patronage numbers. You guys already know that it's not a good news story, but it is an important one that we keep focusing on each time we go through this. This is the first quarter, so we'll just take a little bit longer look at it than we typically do. So we're looking at the first 3 months of the year. And as you know, in the past, we sort of take a quarterly review. So I'll give a few extra minutes, but it won't be very much. If you look starting in the top left-hand box, that's bridge traffic. So number of cars, toll payers crossing the bridge. The bottom of that box is the total line. And we're about 37%. That's sort of in the bottom right-hand corner of that box, that box there on the top left-hand side of the page. We're down about 37% from last year. We're slightly over budgeted, as I mentioned above. In other words, we're slightly over the budget amount, so we have a little bit more revenue than we thought, but 37% lower than where we thought before. And that goes along with what we've been telling everybody, that traffic is running 35% below normal. In this case, it's 37. Looking at the number of vehicles, what that's telling us is we're missing about 1.9 million vehicles, toll-paying vehicles already this year. If you look to the right of the page, just directly to the right of that box, that's the revenue box. That revenue box shows that the revenues are down a commensurate amount, approximately 36% through the first quarter. They're up a little bit over what we budgeted, and that's as it showed in the report above. And that to put a number on that 36%, it's about $14.7 million. So last year, in the first 3 months, we received $14.7 million more dollars than we did this year. And that, there's no other way to look at our situation than that. I mean, that's sort of the best picture. Really give you an idea of what we are having to learn to live without. And as I think was just mentioned in the reports above, that the recovery looks slower than we expected. So this living without these monies for a while longer looks to be what we're going to have to do.
So Joe, if I may jump in and ask a question.
Yeah.
Just for clarification. So looking at your page 67, I think when we look at to the right side of the graph, the bridge tolls, and we see the actual bridge toll revenue from the for the first 3 months in 19 and 20 was about over $40 million, and the actual in 2021, so it's a side-by-side comparison, is about $26 million. I think that's a pretty dramatic number, and I start then. And I'm going to jump ahead a little bit, but I think this is it all ties together. If I were to jump ahead to page 75, which is actually the report of financial statements for 3 months ending September 2020, so page 75. I take the number 25 million from page 67, 25,764,000. And bring it over to the year-to-date actual in the middle of page 75. I hope people are following me, but it's the same number under toll revenues. Then I come down to the bottom of the chart, and I look at excess revenue or loss line, if everybody's looking at that, right in the middle. And what we see is a number of $13,536,000 of it's $13,537,000, and this is the amount of money. And Joe, correct me if I'm wrong anywhere along here. And this is the amount of money that has not arrived at the district as a result of less cars crossing the bridge. Correct so far?
The $13.5 million is our net sort of shortfall or deficit,
Right.
you would say, after looking at the amount of money that came into the district and the amount of money that the district has spent over the first 3 months on its services throughout the district.
Yeah. Okay. So it prompts me to ask a question just on this number, and Joe, you can field it, or Dennis, or whomever. But if we were to try to make up the loss in tolls coming across the bridge, and we know the cars are down and tolls are down, what kind of toll would it take to make this up? How would we approach a toll situation to try to make up that kind of money? Any thoughts on that, either Joe or Dennis or anybody from staff?
It would take about a $4 surcharge per car or vehicle. I mean, the math is painfully simple. You know, the number
would you
of
go
cars
through it
is
for
way
us,
down.
please? Yeah.
Well,
you go through that.
Sure. You know, I always look at the numbers weekly because the weekly math is even easier. You know, tolls are down about $1 million a week, and we have only 250,000 cars coming southbound across the bridge in a week. And so we would need to make up that $1 million, charge each car $4 more.
And we would call that perhaps if we were to implement something like that for a period of time, we would perhaps call that a COVID surcharge or something like that to try to find additional revenue from cars crossing the bridge.
You know, certainly it's an option that could be considered. You know, the federal funds will run out. And absent additional federal relief, the district is faced with the challenge of either greatly reducing costs or finding a new revenue stream. And really the only revenue source that you control that's bringing in any money right now is tolls. So if the board wanted to entertain some way to bring in additional revenues to avoid having to reduce costs further, this is probably the only thing available to you. And if you want to bring in enough to cover the shortfall that you're experiencing on a weekly or monthly or now a quarterly basis, it would require an amount of about a $4 temporary increase per vehicle.
Okay. That's substantial, but, you know, I think we have to ask ourselves the question at some point, whether the public wants to entertain this as an option. And we can discuss it all later, but I just wanted to draw attention to what are the real numbers that we're dealing with here. Maybe a surcharge for 4 to 6 months may be something the public would like to weigh in on and offer up as a way to keep workers employed. So I know that that's something that we will have to discuss, because it's, as you mentioned, Dennis, one of the few options we have for raising additional money via tolls. And of course, the toll payer has every right to know, you know, where all this money is going and where their money is going, and have a chance perhaps to weigh in on whether they would like to pay more during the interim to keep the district, I'll call it, whole. So that I hated to divert everybody from item 8, but I think it was relevant. So, Joe, do you want to continue your report, please?
Yes, happy to do that. And this would be back on page 67 for just another minute or two.
Yes, please.
So back up at the top, and just we had talked about toll revenue, and then toll traffic and toll revenue and how it has dropped, and then just want to briefly touch base, you know, for the quarterly view of both bus and ferry. So in the middle, the two middle boxes horizontally on the page are bus patronage to the left and bus revenue to the right. Patronage is down about 79.5%, so 80%, which is, you know, what we've been seeing month after month. It's been relatively steady. And that equates to revenue down by a little bit more than 80%, because I think we've mentioned that we've lost a lot of our larger fare-paying trips, and we do handle more lower fare-paying trips, in other words, local trips. And that equates in real numbers, again, to about another $3.5 million drop in revenue so far. That's in the box on the right. And then looking at ferry at the bottom of the page, the left-hand box shows about a 97% drop in patronage, which has, again, been pretty steady month after month. And the revenue equates to about the same 97% drop in revenue. That unfortunately is about a $6.2 million drop in fares, because if you remember, the fare box recovery rate of ferry is over twice that of bus, sometimes 3 times. So they bring in substantially more, ferry riders pay a substantially greater amount of their cost of their service through their fare. So the loss of their fare is even more damaging in ferry. So all in told, the revenue drop in that, just on this page, is about $24 million so far this first quarter. So extremely significant difference. Now, as I think Brian mentioned, the difference in the district's revenues over expenses is only 13.5 for this quarter. So even though we've lost, $10 million more in revenue, there's been a significant retrenchment in our expenses based on cutting service and reducing other expenses. So, and that's the attempt, obviously, to do as best as we can to balance the budget so far. And we'll get to more of that on page 75. We already briefly talked about. So that's it for this report. If there's any questions, happy to take them. Otherwise, we'll move on to the next report. But why don't I stop and see if there's any questions on this one?
Perfect. Are there questions for Joe on agenda item 8, which we're going to, have additional discussion with 9A and 9B as well?
This is Bert. I have a question.
Yes, please, Bert. Go ahead.
Going back to page 67 and over on the left-hand side where you have bus patronage, and you have on the middle column where you have budget fiscal year 2021. I noticed that your budget for riders was 52,163 for July, 52,537. But you went all the way up to 83,630, which is out of pattern for the others, and that's how you ended up with a minus 33.4. It just didn't seem to follow the trends. I've been looking at these for a while, and just do you have an explanation for that? You see what I'm talking about?
Yes, Director Hill. Yes, we have been looking through that also, and what we have found and attempting to get it corrected was in the system, and we try to, we get these reports right out of our system, but in the system, we had a situation where we entered one budget, and then we if you remember, we brought back to the board, I think it was maybe 2 months ago, and we changed the budget assumptions for ridership, which we just discussed back on the previous item. So we lowered them because the actuals have been much lower. And unfortunately, that August figure, which happens down in Ferry too, unfortunately, that August figure remained high, and we have not been able to get it into the system to get it changed lower. So we are still attempting to do that, and hopefully you will see that in a future report. Our system is very flexible, but it sometimes is ornery.
Okay, thank you.
Thank you, Bert. Excellent question. Other questions on item 8 here?
Jim,
yes.
Director Maston.
Yeah, Jim, go ahead, please.
So since we've gone down the road of what if relative to increasing tolls, I've been sitting on this question for a while, and that is that since our ferry numbers are still significantly down and not looking to recover anytime soon, has there been any discussion of mothballing the ferry fleet for now and what the ramifications of that decision would be?
We've had internal discussions. This is Dennis, your general manager.
Yeah.
But we're not inclined to do it. We've greatly reduced the amount of service. We've cut all the weekend service, 100%. We've cut 75% of the weekday service. And so the issue is that if we completely mothball the fleet, there's really 2 issues. One is ferries serve as part of the Bay Area's emergency response plan, and we want to have vessels ready. And so offering a little bit of service allows us to have vessels ready and some staff available. The other issue is tied to the bigger issue for the district with respect to reducing costs, and our biggest cost is people. And so there won't be significant cost savings beyond what we've achieved unless the board chose to reduce the size of its workforce. And so we've reduced our fuel consumption considerably at Ferry. The really only remaining cost savings is to look at the staffing side of the equation. But staff would recommend that we maintain a very, very small amount of service, which is all we're operating today, going forward, because in the event of a natural disaster in the Bay Area, ferries are a vital component of the region's emergency response plan.
Okay. Thank you very much. Appreciate that.
Thank you, Director Maston. Other members wishing to ask questions here? Now's the time. Okay. Hearing none. Joe, would you take us through 9A and 9B, and that'll wrap up the data, and then we can see if anybody on the committee has additional questions, and then go to the public if there are public that wish to speak.
Absolutely. So on 9A, please turn down to page 73, and that's just has the summary and of the first quarter, and those are the summary revenues and expenses appear on the bottom part of the page on the left-hand side. So we have revenues first, and those three numbers you have your current year actual, last year actual, and the current year budget. So the important here is because of such a dramatic year we're in, is to look at the two actuals. In total, we're about $27.8 million less in revenue through the first 3 months of the year, $9 million a month, and that is made up mostly of the number we just talked about above, which was the $24 million we've lost in actual fees and fares and tolls. But there's some grant monies, as we've talked, that we've not received this year, and we expected not to because of the change in the economy. And that makes up that difference. Then if you look down, the next line would be the three lines there, and the next to consolidated district expenses. Expenses are lower than we had last year also because of the work that the staff and board have done to reduce, in this case, primarily the service costs. They're approximately $3.2 million less than they were last year at this time. And so on the bottom, the revenues over expenses is where you see the $13.5 million number that was mentioned earlier. And that's the actual difference between the amount of revenue that we brought in, $36 million, and the amount of expense that we've had, which is $49 million. And so that $13.5 million, as I mentioned, is being covered right now by CARES Act money. The expectation now, given that the success the district has in reducing expenses, is that CARES Act money will stretch through October into November, and it looks like just to the end of November. Of course, any unusual expenses between now and then or loss in revenue could change that, and we will keep an eye on it, but that's where it looks like it will run through to the end of November. At that point, as was mentioned earlier, either new revenues or new expenses or lower expenses need to be found. What follows after this in 9A is the series of actual tables, one that Director Sobel referred to earlier. It's consolidated page on page 75, and then all the divisions. And if you have any questions, those we could go through them. Otherwise, I will just briefly turn down to the board on the board item on the capital expenses through the first quarter. And that starts down on page 83, but I'll have you take your attention down to page 85. The bottom of 85 is a table by, it's a summary of expenses by the division here, the divisions here at the district. We also break out seismic because of its substantial impact on capital plan. And if you look over the far right-hand side, well, the second column to the end on the right-hand side is expenses we've had so far this year. And they've been relatively normal. We would hope for something close to, 17 to 20, 22% so far. 25% would be at normal, at the expected expenditure, but we don't expect to hit that. We're in that ballpark, given the way capital expenditures go. Sometimes you have more in the beginning of the year, sometimes you have more at the end of the year. It depends on the program. There's all kinds of ups and downs. So it's nothing too surprising. And then I think I mentioned several months ago, we had an accounting accrual entry in the suicide deterrent, which sort of masks a little bit of its expenditure. That's in the bridge column. So that looks a little lower than it's actually been. Monies were recognized last year that didn't get spent, and they got spent this year. So that has to be offset. So you see a slightly lower accounting entry for that, but the actual work is going on at the expected rate. And so that is the end of 8 and 9. I'm open to any questions on those reports.
Perfect. Thank you, Joe. I know this is a lot of numbers and complicated and all of that, but I appreciate the work of your staff and you in trying to put this together to give us the clearest picture of where we stand, on October 22nd. I will go to board members, committee members, and ask if anybody has questions on item 8 or 9A or 9B before I open it up to any public comment. Okay, I'm not hearing any. Amaret, would you see if anybody from the public would like to comment?
Will do. Hang on one second.
Thank you.
We have no speaker on these items.
Okay. Well, then with that being the case, no actions are required for items 8, 9A, and 9B. So we're moving on to item 10, the first quarterly report of judgments and settled claims. The staff report can be found on page 89, and Attorney Kim Manolius will present the report. Mr. Manolius, would you take us through this, please?
Sure. This is our normal quarterly report of judgments and settlements. They cover the workers' comp as well as any tort claims. If anyone has any questions, I'm happy to answer them.
Well, if there are any questions, please let me know. Any committee members wish to ask any questions of Kim, and Kim, that was a quality report, an efficient report.
Thank you very much, Chair Silver.
Sure, absolutely. All right, I'm not hearing any from any committee members. Let's see. We should see if anybody from the public would like to weigh in on agenda item 10. Madam Secretary, will you check and see if anybody would like to comment on 10?
Thank you. We'll do that now. We have no speakers for item 10.
Great, thank you. No action is required for item 10, so moving on to item 11 and 12 items. The first quarterly report on authorized budget adjustments and budget transfers under the General Manager's authority, as well as procurement actions. Mr. Wire will be presenting both of these reports. Item 11 starts on page 91 of your packet, and item 12 starts on page 95. Mr. Wire, would you begin your presentation, please?
Thank you very much. Yes, I will. Looking at page 91 first, which is the review of the Auditor Controller's first quarterly report on authorized budget adjustments transfers. As obviously this is the first quarter, we have only one action occurred. It actually occurred at the board level. So you are aware of it. It was where we changed the budget for the Santa Fe Transit, capital budget for the Santa Fe Transit Center relocation project. And so that's listed. And then looking at page 95, which is the report on procurement activity through the first quarter. And again, it's just because it's the first quarter, it's a relatively slim report, slim number of items. There's about 15 tasks, both in procurement and in engineering's procurement office, purchases, contracts, and change orders, and they're listed in the following, the report after page 95. And if there's any questions, I'm happy to take them. But otherwise, that's my summary of those 2 quarterly reports.
Great. Thank you very much, Joe. Questions on the 2 reports that Joe just gave us? Hearing none, Madam Secretary, would you poll the public to see if anybody would like to weigh in on these reports?
Sure. We're going to poll the public line to see if there's anyone who wants to speak on these 2 items, and also at the same time we'll poll for public comment under item number 13. So hang on.
That would be great. Thank you.
Okay. We have no speakers under any of these items or public comment.
Okay, thank you, Madam Secretary. Then we're coming to the end of this meeting. I want to thank everybody on the committee and all those listening for your diligence in looking through what are an array of numbers and sadly not great numbers in terms of people coming across the bridge, and certainly the bus ridership, ferry ridership. All of this presents incredibly vexing challenges for the district. I know everybody feels the same about this. It's just incredibly tough times. And at the end of the day, we have to remember people are being affected, and not just at the district, but throughout society. And it appears that it's going to be a continuing situation for a while, as we see from our various data points that the economy as a total is not going to, and the workforce and other indices will not bounce back the way that we had hoped in the beginning. So with that, we'll conclude and adjourn this meeting. May I have a motion to adjourn the meeting, please?
Also move.
Thank you. May I get a second, please? Perfect. Thank you. All in favor, say aye, please.
Aye.
Anyone opposed? All right. Nobody's opposed to closing the meeting off. I'll thank you, colleagues. That concludes this meeting of the Finance Auditing Committee, and the time is 11:22.